guys, good traders, welcome back to Boom and Crash Guru channel, Boom Crash GFS channel. I am Boom and Crash Guru. A must to appreciate the subscribers to the channel. You are the best and you will ever remain the best. And if you are new to the channel, kindly hit the red button, turn on the post notification bell for you not to miss out on every video regarding trade tips, trading tricks, trading analysis that will be shared with us on this channel. So what am I bringing to the table for you guys in this video? As displayed for us on the screen, this analysis was totally made and killed in the VIP channel. So I am here to dissect and break down that analysis for you guys, to teach you and tell you what techniques and strategy that actually played out in that analysis. So it is very important for you to watch this video to the very end, because it is actually valuable for you to be able to plot out this analysis and also kill the market. So without further ado, let's go straight into the chart and let's see what actually went down in this analysis. So ride with me.
So here we are on the chart, guys, but before we dive into the business of today, it is very important to let you know what is going down in the Boom Crash G valuable channel. The VIP channel. In our VIP channel, you get analysis alongside the signal with good risk to reward ratio and follow up updates with every signals given to you. So there's joy and a lot of profit to be made in joining our VIP channel. And if you are yet to have that trading account, no stress, just check the description of this very video. You get the link in which you can actually register and create your trading account and start making the market with us in the Boom Crash G valuable VIP channel with no stress. So that's for that. Let's get back to business. So as we can see vividly on the screen, this is the analysis we are about to dissect and break down, and for us to know what actually happened and the particular strategy that actually play out in this analysis. So guys, let's clear up the chart. Yeah, so basically it's all about price action. So the techniques and strategy that was actually being put out on this analysis are as mentioned. So we actually observe supply and demand level on this market, and also we observe candlestick formation on this market, and also we observe a breakout and retest on this market. So basically these three factors actually came into place and work all together, which actually brought about this analysis. But firstly, we are going to be talking about the supply and demand. So when we say supply and demand, basically what are we talking about? We are actually talking about the seller's level and also the buyer's level. Simple as ABC, without complicating things for you guys. So when you made mention of a supply zone or a supply level, you are basically talking about the seller zone, talking about your resistance area in which you can place a sell order, area in which the sellers can actually perform their roles in the market. And also when we talk about the demand level or zone, we are actually talking about that zone in which the buyers can actually perform their roles, talking about the support level in the market. So guys, a quick illustration of the demand zones and the supplier zone. So you have the price forming this way. So basically these the low, this is the demand zone, whereby this high here is the supply zone, same applicable to this level, the demand zone, and this high, this supply zone. Demand zone, supply zone. So let's mark this exactly on the chart. The demand zone, the supply zone, the demand zone, the supply zone, and we have the demand zone. So one thing about price action is that when you, as a price action trader, basically trading with price action is actually looking into the past, looking at the the past action of the price. From the action of the price in the past, from there you judge the present action of the price. Actually, there's something called extrapolation. So what is extrapolation? So let's see what the meaning of extrapolation is. Here we have it. So according to the definition, the meaning of extrapolation, it says that the action of estimating or concluding something by assuming that existing trends will continue or a current method will remain applicable. This is basically telling us that the past or the existing movement of price in the market will same way move in the future. You can actually judge from the past action of the price in the market, judge the movement of the current or the present movement of price in the market. Basically, that is price action. That is what extrapolation is telling us. So having marked out our supply and demand zone, here we have the levels in which the sellers and the buyers are definitely operating. So we want to analyze the market for us to get that accurate level in which the sellers will actually push the price down. So good. So having identified this demand and supply zone, let's mark out these particular levels. We have the demand zone. Real quick. Demand zone. Of the supply zone. Supply zones, demand zones. Supply zones. Yep. So having plot out your supply zones, which are the resistance or seller zones, and also plot out your demand zones, which are the supports or the buyers zone. So what happened is that I've gone to the price movement, higher highs, higher low, higher highs, higher low. Price came back to form what we called the double top or equal highs. What we call equal highs, or double top. That's for that. So trading the double top formation, in which we can also term the M formation. So when we have formation like this, so in trading this is for us to await the break out of the neck, and after that the retest of the neck, we get the entry, then trade it to the support. This is actually a double top formation or M formation that we can actually trade. This is the neck of the neckline. So this formation actually played out also in this market. So let's see how the information actually played out here. Having it, we have the M formation, we have the double top or the equal high, and as price actually got to the neckline, we got our breakout. And what do we get next? We have a retest of the neckline, and boom, market actually sold to the support. So let's draw out the neckline. Here is the neckline. Neckline of the double top. Neckline of the double top. So this is the support. This is the support. So after this formation actually played out, we got price also went back to that same level, the demand zone level, this level, and the neck line of the double top level. The price actually came back again to that level. We actually got this setup as well. So the market actually sold from that neckline back to that same support. And what do we get? We get price actually retested the same neckline. Retested the same neckline. Yeah. This where the setup actually came out, and haven't seen the price came back to this neckline. We don't just barge in because there may be a possible breakout of this neckline or the demand zone, which the price is actually making a supplier zone, a support. This demand zone, the neckline, which was actually broken out and then retested. So the demand zone has now become the supplier zone. Supplier zone, supplier or sellers zone. That's that. So I haven't seen the price actually retested this zone. We have to await in confirmation. This level as well is going to stand also to retain the price falling down from that zone. So where can we get our confirmation? We are actually waiting for a candlestick formation for us to get that confirmation. Don't forget, we have a particular seller zone here. This is a supplier zone. So when price, let's draw out this zone. Let's draw out this zone. We draw out this zone. So our confirmation is that we must get a candlestick that will actually move back from this supplier zone and break through this supplier zone, and we should have a retest. Then we are certain that okay, the seller zone is going to hold again and we ride it down. So what do we actually get from the market? What confirmation did we get? The candlestick formation we actually get was a bearish engulfing candle. Here it is a bearish engulfing candle. See this candle, this bearish engulfing candle. This is what we get. This actually broke to this supplier zone. Broke to it. And after we got that breakout, what are we expecting is a retest. So this follow-up candle, this bearish candle actually went back to this zone. You can see the wick actually came out from that zone, from this bearish, small bearish candlestick. After we got that wick rejection from the zone, we are definitely certain that the market is going to fall. So we killed the market. As we got that confirmation, we entered and we killed the market so well. Presently, as you can see, the market is still selling. We can see the market is still selling so well. So these are the factors and the techniques which actually played out on this analysis. So we have the supply and demand zone, we have the M formation, or what you can call the double top or equal I formation. We have a breakout and retest strategy which played out also, and we have a candlestick formation that gave us the confirmation that okay, there is bearish structure in place and bearish movement in continuation. Basically, these are the techniques which was observed on this analysis.
Our protocol observe all factors put into consideration. We observe the supply and demand zone, and also we observe the M formation or double top formation, or what you can call the equal eyes, whatever you choose to call it. Everything goes. Speaking of supply and demand zone, speaking of breakout and retest, speaking of candlestick formation, and speaking of all kind of chart patterns, all these will definitely be treated on this channel. So kindly stay tuned, because we have a lot to dissect on this channel. I believe you've learned one or two things from that analysis dissection, and I believe you've gained one or two which will definitely add up to your trading skill set. And if that is the case, kindly do well to give this video a thumbs up and kindly subscribe to the channel. You know the drill. A must appreciate the subscribers to the channel. You are the best, and you will ever remain the best. And if you are new to the channel, don't hesitate to click that red button, turn on the post notification bell for you not to miss out on every video regarding trade tips, trade tricks, trading analysis that will be shared with us on this channel. Having said that, until next time I come our way, bye.
Just